we begin our program, we're going to lead off with the first panel, and the first panel will be led by the man who is in the Guinness Book of World Records as the world's tallest politician, the president-elect of the NAIC, and a man I'm happy to call my friend, John Godfread.
All right. Well, good morning, everybody. Good morning. Good morning. I've got a wonderful group of panelists here. But first and foremost, I want to invite you all to take your phone out. So usually we want you to put your phone away and really focus on the panel. But here we want you to log into Slido. We're going to have a question up there, and this is going to be interactive. So please feel free to type in things in the chat and give us some questions. But we got one question up there. I'll let you guys kind of fill that in a little bit while we get to our panelists. I have the distinct honor of hosting our very first panel up here. I've got a wonderful set of panelists, Pina, Neeti, and Jasmine from representing the life insurance industry, the P&C industry, and the reinsurance industry, a very diverse kind of set of sectors of our industry. But as we go through the discussion today, I'm sure you're going to see some similar themes that kind of build together and run together that cross the entire industry. So again, first, want to have you take your phone out, answer the question. We'll get to that in a minute here, but there's really nothing off limits with this panel. We're prepared. I know everybody's prepared. We won't be too mean. But again, it's an encouragement. If you've got things you want to hear from, feel free to put that into the chat, into the Q&A. But we are going to cover a number of different topics, from climate to technology to political change and inflation, and a number of different areas as leaders you all have to keep a visibility to. And so I'm confident that you deal with this probably at a much higher level than I probably even do. So I'm very interested to hear your thoughts on that. But before we get to that, let's look at the results of our question. So the first one is, what is the biggest challenge for the insurance industry in 2025? And I wanted to give our panelists an opportunity. Any surprises on the response? We've got climate and natural catastrophes is leading the way. Inflation and geopolitics is coming in second. Cyber risk and AI and technology. I think 2 years ago, maybe AI and technology would have been a little higher up on the scheme. But any reactions from our panelists at all? Neeti.
I'm happy to kick it off. Firstly, I want to say thank you so much for inviting me today to speak on this panel. It's absolutely an honor, and just to level set, I'm kind of here wearing two hats, right? On the one hand, I'm here as the CEO of Hamilton Insurance Group, but on the other hand, I'm here as the chair of the Association of Bermuda Insurers and Reinsurers, so my answers are going to go back and forth depending on the question. I thought I'd level set. I am a little bit surprised. I mean, very clearly, climate risk and natural catastrophes have been on the rise. We heard just earlier about the frequency and severity, but for that to take such a dominant place on this survey is a little bit surprising to me. To be honest with you, depending on the day of the week, I could put each one of these in first place. So I respect it's a very difficult question to answer. I think at the end of the day, all of these are risks that this industry has to address and find solutions to. So I think you've identified the right ones here.
Yeah, I think if we had an all of the above option, I think that'd probably take lead. But anything else? Anybody else?
Yeah, maybe what I would say is, in addition to all of the above, I think what we sometimes miss is the interconnectedness of all of these. And I think that's probably the biggest issue we all have to be thinking about very deeply, because if you think about what are some of the structural foundations that enable insurance, right, sort of writing, availability and affordability to exist, it is based on certain premises regarding views on predictability of certain outcomes. It's on past having some element of prologue for the future. And I would argue that just building on what Pina said, each of these things reinforces the other. And I think if we miss the interconnectedness of these and the enforcing mechanisms of these, and in addition to that, then ask ourselves the question, do the shock absorbers that we have counted on, whether it's institutions, whether it's the legal system, whether it's global collaboration, are the shock absorbers still as strong trust in institutions overall, societal attitudes, are those shock absorbers still in place as we think about the protection gap that the commissioner was talking about earlier? So maybe that's what I would say. I think it's all of the above, but I think what we stand to miss, and if we miss that, I think it causes us a lot of issues, is these are reinforcing, they're correlated, they in fact, a lot of these are ultimately inflationary. So whether you think of inflation as its own thing, or whether you think about where inflation is likely to be, and are these trends all ultimately inflationary or deflationary? You could argue at the margin, there's going to be more transition risk across all of these things that's likely to be more inflationary than not. And how governments and policymakers respond is going to very much drive whether these things actually ultimately result into opportunities, or actually result in these being risks that the gap has to grow because we're just not able to lean into it. Maybe the other thing I would simply say is what's not on the list, but I think should be on the list, is what we call legal system abuse, which is very much right through the lens of we all are seeing broadly defense costs, settlement costs, everything is rising, and we know ultimately that is having a negative economic impact, and we don't talk enough about actually the tort and the legal system in the US. And by the way, it's not just a US issue. We're starting to see product liability and redress issues show up in Europe. These are issues that, again, are going to challenge the shock absorbers. And so I'd say legal system abuse should probably be on this list as well.
I think
and
that's covered under other, I think.
It's a big other.
It's a great point, because we've had some, and it's not just the insurance industry that impacts. I mean, when you think of climate, you think of wildfire risk and other pieces. That strict liability, the piece that comes with other industries, and how does that impact, and how do you ensure that it all is trickled down? You mentioned the interconnected of all the different topics up there. Jasmine, I want to give you an opportunity to comment on anything that you see that's surprising to you, or simply again, we've got a very different sectors of the industry up here today, but I think all these risks impact each one of you differently, but yet collectively as a whole, and there's probably solutions that work different for other industries as well, but I wanted to give you an opportunity to comment.
Sure. Well, yeah, much has already been said, and I do agree that these things are all very interconnected. Maybe when I think about it from the chair of the industry, I think one of the challenges we have is to help consumers figure out how to navigate these topics in a way that's meaningful for the outcomes that they're trying to achieve, and protecting their own personal risk as it relates to, in my case, being more on the life annuity side of the business, things like retirement planning. So I think the pace of change is faster than it's ever been. It's interesting that you mentioned AI and technology might have been at the top of the list a year ago. I think that is also a little bit of a function of the uncertainty and volatility in the current market environment, which we also heard about from Commissioner Mays. So I think the challenge for us as an industry is, how do we really help find ways to make it easier for consumers to navigate these things and to assess their own situation, both with respect to the risks that they might have, as well as their risk tolerance, and making sure that we're providing solutions that are relevant in a really rapidly changing environment.
Perfect. Well, we are going to jump into some of the questions we've got. I can take a cue from the audience. Certainly, we'll probably start with climate and natural catastrophes. And Pina, I'm going to start with you. So, obviously, this is an area of focus, right? I mean, I think the audience has spoken that 44% of those who responded, that they see that as the biggest challenge for the industry in 2025. Can you talk a little bit about the approach? Hamilton has a very holistic view on it, on sustainability and the climate, and I'd love for you to talk a little bit about your approach and how it ties together with underwriting, investments, and other company activities.
So let me start just firstly from my Bermuda hat, or my aviator hat on, just talking about the Bermuda market. And as many of you know, the Bermuda market cut its teeth on insuring natural catastrophes starting 30 years ago when Hurricane Andrew hit. And it has, over the course of time, then built up an infrastructure, a talent base, a capital base, both on its own balance sheet, but also on third-party capital, to address the growing need to cover natural catastrophes around the globe. When I turn to Hamilton, we're a Bermuda player. We write this kind of insurance. It's all about the underwriting of these risks. It's all about the risk assessment, the modeling, taking in our own assessment of what we see in our data patterns and our claims patterns, and turning the dials based on what our view is of that risk. And we call it the Hamilton view of risk, right? Because we look at these vendor models, we input them in our system, but at the same time we have our own experience and our own view of weather patterns and wind shear, etc. So it's all about the underwriting and making sure you do the underwriting properly so that when a disaster strikes, you're in a scenario where you can actually pay these claims, help rebuild communities. That is the purpose that this industry serves in that regard. Now, when I talk about it holistically, when I look at from the flip side of that, also underwriting, but when we look to insure, we write some insurance business and we write some property business. When we look to insure risks, we also have underwriting guidelines in place and favor companies that are not negatively impacting the environment, not contributing to climate change, so that we are making that impact in that regard when we're doing insurance. And then I would say finally, yes, on the investment side as well, we have criteria in place and we monitor our investment managers and hold them to criteria to make sure that they're also making their contribution to ensuring that climate change doesn't take a course that we don't want it to take.
Perfect. So Neeti, I'm going to move to you. Following up on that, again, Liberty has also done an absolute ton in this area as well. And you've got a growing global footprint, and I imagine there are certain challenges to implementing sustainability policies across jurisdictions with the various norms and regulatory frameworks. So I guess, how do you balance the desire for a unified strategy with the reality of those local markets?
Yeah, it's a very vast question, and maybe I'll take a step back and first paint sort of 2 or 3 framework lenses that I think are important to think about. One is when we talk about climate risk has sort of 3 components to it, broadly speaking, right? And each of those matter. There's the physical risks aspect of it, which is very much, you could say, there's an element there where we need to continue to think about advancing climate science, right? Commissioner Mays talked about the data part of it and the analytics and the need to get very granular around that. So we very much think about, on the physical risks part, how do we think about what are truly acute risks that we're seeing in the weather pattern changes, but also what are just shifts that are happening, call it increasing sea levels, that are just likely to result in permanent shifts and that are more severe in how we think about that. So that's kind of the first part, which is the physical risks. The second part of this is the transition risks, right? And sometimes I think we confuse transition risk with also energy transition. And that's where I do want to draw that distinction out, because climate transition risk and energy transition risks are correlated, but they are not the same thing. And I think we have to think about both of those, because the responses that each government and that each policy area takes to how they think about climate risk, but also, and regulators, right, how they think about that, but also how you think about energy transition matters. Energy transition is very much about how do you decarbonize the economy and how do you actually transition everything around the way energy is generated and distributed, and how are then consumers consuming that, and how do you impact demand and the renewable side of things. And that has its own set of risks, and therefore I'll come to the point about collaboration in a minute. And then the third component of this, which again we're just starting to see early signs of, is liability risk associated with climate, right? You're starting to see some cases show up in Europe around people suing their governments, right, for excessive heat. You're seeing this in the construction industry in a lot of ways. And so I think we have to first be very clear-eyed about what are the components of climate risk, where are those components distinct to climate risk, and where are they actually overlapping with energy transition risk. And we have to think about both those risks, because as Liberty Mutual, right, we are global. We write across multiple products. We write all industries, and we have to think about that. To your point, therefore, about then how do you sort of take that and apply it in each jurisdiction and in each area, and how do you think about it? First and foremost, I would say it starts with, this isn't about managing to disclosures. It is truly about what is your business strategy and how do you incorporate the thinking behind these different elements of climate risk and transition risks into your thinking around how you address business strategy. So that's first and foremost. The second part of this, I think that's really, really important, therefore, is also to then say, underwriters, people, right, the ecosystem holistically, how do you continue to advance the knowledge and understanding that, by the way, because guess what do most underwriters want? What do most people want? What do regulators want? What do we all want? We want, here's the model, here's what this is going to do. If A equals B, then C is the outcome. Can we put a box around it? Yep. Done, right? And guess what this is all about? We just don't know. I think we have to acknowledge that, one, we have to acknowledge that we've probably baked in quite a bit of the dysfunctionality that's going to come with climate transition into the system already. And so we have to play defense. And so how do we really start to think about scenario planning? How do we educate our people? But how do we also educate our customers and our consumers on how this shows up? So the approach Liberty's taking is, one, we are very much looking at it through the lens of data, climate science, and advancing that. The second is education and awareness and modeling through the lens of both our employees as well as our clients. So we make a lot of our climate science stuff available to our clients. We're actually looking to build a portal where we can start to really engage with our clients through how do you think about risk control and mitigation as you're thinking about that. And the third aspect of this is truly a humility that insurance is one part of the equation. Ultimately, what this is going to require is, whether it's industrial policy, whether it's regulation, and how we think about what the policies are going to be to support the regulation, and that these are all going to be, shall I use the word again, dysfunctional, right? And they're not going to be, they're not going to move at the same pace in every part of the world. And by the way, what climate transition and energy transition means in India is very different from what it means in the US, is very different from what it means in Dubai. And we have to really sort of therefore then look at this through the lens of what is the business strategy, and through the lens of we are here to support our clients through this various transitions that exist. And so we can't say no. No is not the answer, but how do we then build a risk-aware sort of organization and culture and ecosystem that recognizes the risk signals, understands that those risk signals are going to be dynamic, and how do we then actually lean into those? Because I think ultimately that is our goal as an industry, but I think it's with a great sense of humility that we can't do it alone.
You covered a lot there, and it's really, really good. But it leads me to kind of a follow-up question as well. And it's, you know, we've obviously been working on this from the NAIC level. I think every supervisor and regulator probably in here has had a number of discussions on climate. And I think we're still trying to figure out as a regulator body is what our role is, right? And I had a discussion yesterday even that it's if there's a thought, I think there's pockets probably in the world or in this country or wherever that we can regulate our way out of this, or we can, you know, if the insurance industry just did X, we would be able to solve the problem. And I don't agree with that necessarily. Because like you mentioned, it involves the energy industry. I mean, every industry in this world has a portion of this, and and insurance underlines most of it. But how do we? I guess the question for all the panelists is, what role would regulators or supervisors have to play in this, and what's your viewpoint as you know, leadership in your companies? Anybody can jump on this one. This is more of a follow-up.
I think communication here is key, and understanding each other's approach. You know, a lot. We have talked about this area and the fact that we are seeing an increasing amount of natural catastrophe activity. We are seeing, you know, the severity of these risks increase. So I would say two things to that. Number one, I think a mutual respect of we are in an industry that has to be sustainable. We have to be able to continue providing these products to the consumers. And in order to do that, we have to be able to assess the risks and those growing risks. And those are going to be factored into the pricing and into the terms and conditions that we offer. There is no other way to keep this industry sustainable unless it is able to pay claims and still be there to pay future claims. So that's the first thing, is really getting a better understanding, to, that dialogue, to understand what we put into our models. What are the factors that we consider? I think the second place is really in terms of resilience. A lot can be done in terms of regulation, law, etc., to educate the public. Listen, guess what? It's not a good idea to build a home on a cliff edge. It's not a good idea to build your summer home, right on the ocean. We have to be a little stronger there in creating those rules so that we don't, we allow people to have a livelihood and to enjoy their lives, but not to do it in a way where disaster is going to strike. And maybe connected to that also, and the industry is involved in this, is teaching people, often after disaster strikes, quite frankly, when you're going to rebuild your home or your business, to make it more resilient. There are ways of making a home more resilient, a business more resilient, to withstand these natural catastrophes that we're seeing on an increasing pace.
Yeah, all very good. Any other comments on the role of regulation in this space?
I have lots of thoughts on that, as you can imagine, but I'll leave it to two. One is, regulation has primarily defined its role as protecting the consumer. Mm-hmm. And I think that's a very important role, right, because of the role that the industry serves as a shock absorber, right, to use that word again in the economy. But I think we may have to reorient around, what does protect the consumer mean? And what I mean by that is, we may need to step back and say, we have defined protecting the consumer through, and I'll be very generic, through the lens of clarity on what protection are you buying, at what price are you buying it, and can we make that, right, advertising be clear and all of those things. But it's also oriented itself a little bit toward truly almost minimizing the cost, right, as one way of protecting the consumer is, let's make this as cheap as possible. And I think we may need to think a little bit around, through the lens of regulators, is how do we start to bring back to the conversation the fact that insurance acts as a risk signal in the economy? And so this ties to my second point. I talk a lot about, as an industry, we need to be risk aware, not risk averse. And I think we've somehow found our ways into broadly being mostly averse, and then pricing that the bit we're willing to write at a very low rate. And essentially, that's what's led to, I think, some of the protection gaps we're talking about, and the lack of innovation, frankly, that we're talking about. And I do believe that regulation has contributed a little bit toward the direction of travel being toward that, rather than how do we resuscitate the risk awareness part? What is the role that the consumers have to play? It's a two-way street. In order to have insurance, you have to mitigate, and you have to follow certain code, you have to follow policy, what is the role that the policymakers play? What's the role the regulators play? What's the role the federal government plays? And so I would say the regulators, you all, have such an important role in that ecosystem to start to essentially put back into the conversation that we are a risk signal. What we need to build is an industry that's risk aware, but in some ways, actually, what we have built so far has led to actually minimizing that risk signal, or not necessarily reading the signals in a way that get to the interconnectedness part of it and actually lead to innovation that makes this industry more risk aware. That's probably what I would say.
Yeah, I think we're seeing consumers in the world across the globe are probably more aware of their insurance policies and insurance issues right now, probably more than ever. And I haven't been in the industry forever, but it's certainly a time when we're getting more questions. People, I think, are digging into their policies, and so there's an opportunity there too. Just exactly what you meant that they're talked about, is to again help direct, and I think that's a great place for the regulators to be. Jasmine, I want to turn to you a little bit. So Allianz Life they specialize in retirement risk management, right? So you're outliving your money and you want to retiring in a down market. So I want to have you comment on what the risks related to climate affect, how do they affect retirement planning, and what is Allianz doing to bring these risks to the attention of the financial professionals and their clients?
Sure. So it's interesting because sometimes as we're talking to financial advisors about topics like climate and, you know, all the related impacts, there's a bit of it takes a minute to say, like, well, what's that real connection, quote unquote, to what we do? But actually it's very real. And Pina and Neeti have given a few examples along those lines, but it was stated earlier that history isn't necessarily an indication of what we're going to see in the future. But one thing that is for sure is if you look back over the last several years, the number of billion-dollar or more climate events that have taken place each year is continuing to rise at a pretty steady clip. So last year, I believe it was $28 billion plus natural disaster events occurred, and I think the prior high was in 2020 with about 22. So these things don't just affect, you know, a subset of retirees living on the ocean in Florida, right? But they're affecting everyday consumers, you know, kind of wherever they live. Sometimes it's also not the billion-dollar catastrophes, but it's things like, you know, a really torrential hailstorm or other type of event that causes significant financial hardship for people. So one of the things we're really trying to do is help our advisors, help consumers think about how they're prepared to basically digest these rising costs that are associated with some of these natural disasters and how to factor that into part of their retirement planning, just like they would think about other areas of potential spending or risk tolerance. I think the industry's used to already thinking about health events and kind of how health insurance helps supplement a retirement plan, and, you know, really thinking about your needs and working that into your plan. The risks around climate really have to be handled in much the same way. You know, so we're really working to educate advisors to help them help their consumers with questions around things like, you know, exactly as Pina was saying, like, where do you want to live, and are you willing to kind of accept the risk that comes with living in a place that could bring a much more probable risk of a catastrophe that could create financial hardship for you? How are you prepared when something does happen with contingency funds to kind of restore back your home or your assets? So I think the connection is really very real, and it's an area where I think advisors can play a really important role in helping consumers think about yet one more aspect of planning for risk in retirement.
Yeah, absolutely. I think it's not just the climate-related risks like you mentioned. It's in times of inflationary pressures too. It becomes it's not about discretionary income going into your retirement. This is a fundamental piece of your financial well-being going forward, and having that conversation with the advisors is critical, and it's going to be important to bring that onto the consumers as well. But it all ties together, right? And so I want to take one question from the Slido here. That's sticking on the topic of climate, and Neeti, you mentioned this a little bit in your opening, but so it says insurers have invested in modeling and quantifying physical climate risks, but how are they addressing the rising tide of climate-related litigation? And it may be too early for that, but I'm just curious if you have any comments. Anyone on the panel has any comments on that?
Do you want to go first, Pina?
Go ahead. I'm happy to go second.
Very much so, looking into this, investing in it, being very aware about it. So I would say maybe 2 or 3 things around this. One is, because we're a global insurer, one of the ways that we sort of have organized ourselves in recognition of the fact that these risks are highly interconnected and that they all have sort of reinforcing mechanisms in them that lead one to the other. There's actually a lot of value in saying, how can we, as a global insurer, actually make sure that we're picking up the risk signals from wherever they're emerging and saying, how do we think about those as leading indicators, and in terms of where else could they show up, and how do we start to think about it? So really organizing ourselves around emerging risks. And when I say organizing ourselves, I mean underwriting, claims, legal, and you know, call it data science. You've got the cyber part of this that comes in. So really organizing our operating model in a way that says, let's recognize the interconnected nature of this, and that there is a whole series of emerging risks. How do you identify them? How do you start to actually become risk aware by making sure you're talking to the right people? And where is it in your portfolio that you're starting to actually see it? So like I said, we're seeing it in Europe. So what are we seeing there? How do we then learn from that? What are we going to do about it? How do you think about it in your coverage language? How do you think about so there's that aspect of what can you do internally. Which is organize yourself and think about it very much through the lens of business strategy. And it is through this lens of being risk aware, because we want to make sure that we are able to address these issues, not run away from them. So that's the first part of it. The second thing I would say is very much through the external lens of engaging very deeply where we can, like forums like this, but also where we can across different bodies, across different regulators, but also across different jurisdictions around really understanding and building a fact pattern around what's emerging there. So maybe those are the two things I would say. But I think maybe the third thing I would say is then thinking through scenario analysis when you think about setting risk appetite and when you're thinking about sort of reinsurance. Maybe actually one more thing I would say, we do everything from insurance to reinsurance in our portfolio as well. And so I think one thing that people have to also recognize is, because we do insurance, reinsurance, and retro, is how you're seeing what's getting excluded in certain areas and how that's shifting the risk in different parts of the portfolio is becoming very important as well. So I'll give you an example, somewhat related but somewhat tangential. In the US, your property policy has terror in it, right? And how we think about potentially then geopolitical risk, but also SRCC risk then, right? Which is related to climate litigation and climate risk in some ways. If you think about the Arab Spring, which feels like so long ago, but that was a climate-related event, right? Like it's food insecurity. And so how do we start to think about where is it that we really should be thinking about underwriting and charging for different coverages in a different way versus where we've kind of thrown those in the past as an industry as part of a broader coverage.
I'll just add briefly from the perspective of Hamilton, and maybe this is something for others to consider. A lot of this climate litigation comes down to, there's a term called greenwashing, right? Organizations or companies saying all the great things that they're doing in order to tick the boxes and appease the masses and make it look like they're doing everything, but actually, in substance, they are not. So I think the lesson to be taken from that, and that's what we did when we formulated our sustainability policy, is be honest and be realistic about what you're actually doing, so that you can avoid that kind of litigation. So, we are very, very conscious about what we say, about what we're capable of doing. I don't build rocket ships. I don't build cars, so I cannot reduce the emissions. I am a services business. So be realistic about what it is that you can do, and then do the things that you say you're going to do. And that is, I think, an important part that will prevent you or protect you from this kind of climate-related litigation.
Yeah, as my mom always says, honesty is the best policy, right? And no, I so appreciate that, because we struggle with that on the regulator side too, right? Where there's promises made or press releases put out or what have you, and then there's a natural market reaction. Yeah. And you dig into it, and it's like, well, that's not really there. But I'm going to shift gears here just a little bit. We're going to move into the inflation and kind of geopolitical areas. And so, Jasmine, I want to start with you. And you, in your last question on climate, you kind of touched on the cost and how we do that. So we are in inflationary times, and there is, while it's coming down, interest rates are relatively stable, but I'm curious as to see what Allianz sees as opportunities in both the short and long term to fulfill consumers' need for or desire for certainty in this space when it feels relatively uncertain in the consumer market.
Yeah, that's right. Even I think at the beginning of this year, we were expecting inflation to take a very different path than it appears to be taking, right? So back to this theme about, well, the one thing that's certain is the uncertainty of the environment that we're living in. For us, in many ways, it does kind of naturally highlight some of the benefits of the types of products that we offer, which are really geared around providing some level of guaranteed lifetime income to help consumers. What we're hearing and seeing is that's becoming increasingly important, because with all the other variables that are coming into generally a higher cost of living, the need and desire to be able to protect kind of a base level of retirement income is something that people are really seeing. So we're certainly, kind of doubling down in that area and trying to really help consumers with advice through their financial planner, of course, and also tools and features in the products that will allow them to kind of model out different scenarios to improve their probability of success. And really evaluate kind of what type of upside or downside they might want in a product that isn't just a fixed rate, kind of guaranteed product. There's also some features that we've been working to build into the products to provide a better level of inflation protection. Those types of features and benefits we find are particularly relevant and useful right now. And I would say, I think, really just focusing on financial literacy and education. I think, unfortunately, in our society, at least here in the U.S., but I think this is somewhat true in the global markets in which we operate, the kind of level of planning that's done is often started too late and isn't really sophisticated enough to think about all the unknowns and all the uncertainties that one could encounter in retirement. So really trying to focus earlier on that kind of retirement planning curve where we can have a greater influence and improve the probability of success is really important. And then I guess the last thing I'd just say, and it's a bit of a theme in some of the other questions, is as a company, how can we really focus on access and choice? So having a broad suite of products that's designed to meet multiple needs for consumers, that's increasingly important in a volatile environment. And then I think really making sure that the products are accessible through financial planners, through a product we've launched, for example, for distribution in the employer market, is, I think, increasingly important because we're seeing this peak 65 phenomenon hit, at least here in the U.S. We need to have as many ways as possible to reach consumers based on where they're at and give them the tools that could help them navigate level of certainty that they need as they're going about their retirement planning.
Yeah, I think there in uncertain times there are areas of certainty that consumers can navigate. And I think financial literacy is a key part of that because, again, when everything else feels kind of chaotic, if you're able to secure your financial future, that is a foundational, calming aspect of life. And there are absolutely products exist that do that. It's a matter of, I think it takes all of us, to be honest, to help our consumers get involved and understand the risks that they have, and then that there are products available to cover that, which can, again, give that kind of calming sense for the future when you're in kind of chaotic times.
Yeah, the more you feel in control,
Yeah,
the more
exactly.
secure you feel about your future, right? And we've talked, for the last several minutes about all these things that are really uncertain and frankly outside of most of our control, right? So, I mean, it's kind of that basic, back to your advice from your mother, you control what you can control, right? And I think, the more we help equip people to take control of the things that they can influence and to make good decisions aligned with their retirement planning goals, I think that's a really important role that our industry plays.
Absolutely. I think my mom would be absolutely surprised that she's getting mentioned on an insurance CEO panel.
She must be cool.
She doesn't necessarily know what I do, I think, half the time, but she's very proud of what I do. So, Pina, I'm gonna switch to you and looking at the Hamiltons. You guys have many global industries. You span a lot of places, and so you've got the impact of COVID disruption, the post-COVID inflation, the multiple wars raging on across the world in the last few years. They've all taken their toll. And just curious, how has Hamilton navigated these challenges, both within the company and with providing solutions for your clients?
So yeah, it's been a busy few years, I'm going to say. A few curveballs have come, our collective way as an industry, and you've named some of them with COVID and the geopolitical tensions, et cetera. I think, the number one thing is, I think the industry, and Hamilton in particular, we've risen to the challenge. I mean, we have paid valid claims, which were necessary to pay to get people back on their feet, businesses back open, and we're very, very proud of that. I think one thing that kind of goes underestimated is the solution part of what this industry can bring. And we were very, very proud, when the economy shut down in the middle of COVID and everybody was worried about vaccines. We were one of a handful of reinsurers who backed a program that transported vaccines to needed areas around the world. That's the kind of solution that you have to be capable of bringing to the table in the midst of all of this disruption that we're going through. And even more recently, if you look at, the Lloyd's solution about getting getting grain out of the Ukraine and ensuring the safe passage of grain, not, to areas around the world, and particularly the areas of the world where it's most needed, in the UN Food Hunger Program, and making sure the grain got to those areas of the world. So that, I think, is incumbent upon the industry in the midst of all this turmoil to think about what are the solutions you can bring to the table, and look at the art of the possible.
Any other comments from? Well, I guess so. We'll move into, and Neeti, this maybe is for you. So we saw earlier this year all the attacks on the shipping vessels in the Red Sea. They have affected the pricing of certain lines of commercial insurance and have the potential to seriously impact the global supply chains and ultimately our consumers. So how do you see insurers or regulators, for that matter, viewing the threat of the continued global conflicts over the next few years?
Yeah. Not very well so far, I guess. What I mean by that is the following. I think our base case has to be that there are going to be more threats to the geopolitical system going forward than there were in the last decade. And that's, in a realistic kind of scenario we have to be thinking about is, what does a war between US and China look like? And is that a kinetic war? Is that not a kinetic war? And how does that kind of play itself out? And the third aspect of this, I'd say, is just in the last 2 years, as Peter was talking, I was thinking, man, it feels like just one long frickin' year since 2020, right? Like, in a lot of ways, it just feels like, can the year just end? And I think there's an element here of, while I'd say we've all risen to the challenge and we've risen to the occasion, came through COVID, Russia-Ukraine is still very much alive. And one of the biggest potential issues that is still to be resolved is the Russia aviation issue, and how is that going to play itself out? And that is, a lot of us are watching that and working through that very closely. And then you got the Middle East escalation potentially that's playing itself out. So to your point about the Red Sea and the Straits of Hormuz as sort of that choke point that we've all sort of thought about and all of that, I'd say actually, one, on the positive side, on the optimistic lens of this, I would say we're all getting really good, right? There's something that comes with reps. So we've gotten good at building playbooks that deal with crises. An organization, I'd say, we've gotten so much more dynamic internally about how do you organize literally war rooms. I mean, we have war rooms now on each of these things, and how do you coordinate? How do you become more dynamic? So one, on the optimistic side, I would say, sadly, we have all built playbooks around this thing, and we're rising to the occasion. On the sobering side of things, I wouldn't call it pessimistic, but I'd call it sobering side of things is, I think we still haven't quite fully, as an industry, and I keep coming back to us as that ecosystem between regulators and, right, take just the sanctions as the example. The way we all had to deal with how those sanctions for Russia, Ukraine played out, if we had to do that over and over and over again, I will assure you it is a very, that is not something that is sustainable, because we weren't built to deal with sanctions that kind of show up in such a uncoordinated way. So what I mean by the realistic side of this is, I think we all have to build into our scenarios that volatility is more likely, geopolitical volatility is more likely. We're all going to need to get more dynamic around how we think about shifting and using different levers. We have to go back and look at our coverage languages again. We have to look at all the things I talked about SRCC earlier. But what that also means is that if our goal as an industry is mind the gap, as Commissioner Mace was saying, actually it's more likely than not that we should really start with the base case that says that gap is going to grow, not shrink, because of the geopolitical volatility, in addition to all the other things we're talking about. And therefore, what are we going to do about it as a system together in order to really address that and think through it? There's a lot of work going on at Lloyd's around that. There's a lot of work. But again, there isn't enough coordination across the regulators and across the policymakers globally, and these aren't issues that are tackled within one state or within one country. By the way, you overlay on top of geopolitical dysfunctionality, political, right, dysfunctionality, because what happens, just as you said, you get to control what you can control. Well, what a lot of these history tells you, when you start to see this sort of unpredictability, what also happens is you result in tribalism and nationalism. And that is in some ways the opposite of what we're going to need if we're going to be talking about these challenges and risks that are borderless. And so how do we lean into that? And I think that truly is the challenge of our times.
Yeah, I think that's a great point, because there is no one country, one market that's going to be able to weather this alone, right? And so if we put up walls or whatever and try to, no matter who it is, it's going to take a global sustained effort to try to navigate some of this. Your point about this being a really, really long year, amen. It feels that way. And so I'm just curious from the other panelists too, Jasmine or Pina, how are you guys working this into your business plans and your management structure and kind of your own risk analysis for your own business? I think if I'm sitting in your shoes, just what I would think is like, okay, these are, one-off kind of hopefully short-term issues, and all of a sudden now it's been 4 or 5 years, and there is no, not to be pessimistic, but I'm not sure I see the light at the end of the tunnel of getting through this, and there's probably something else that layers on top of that. So from your viewpoint and where you sit in your companies, how do you guys build that into your business planning and your management?
Mm-hmm. Yeah, I can go ahead and start. I mean, I can't remember whether it was Pina or Neeti, but I think the word playbook is one that we've also adopted internally. So it's funny, maybe, quote unquote, with the benefit of hindsight, but maybe 6 to 12 months before COVID hit, we were, having a conversation internally. We're like, we should build what would ever happen if interest rates went to zero? Mm-hmm. And everyone was looking around the room like, yeah, sure, that's going to be great, right? That's never going to happen. Well, long story short, we did build a playbook around that a little bit more as an intellectual exercise. And we never thought 6 months later we'd be running that playbook, but that taught us a great lesson around kind of the value of thinking of the unthinkable. So for us, I would say we've really doubled down on building tail risk models and really kind of pressure testing with different sensitivities, the what ifs of some different events that could have an impact on our business. I would say we're also starting to look at risk much more kind of holistically. The financial risks, of course, you would assume a company like ours would be thinking about. We're in the business of risk management, so that's our bread and butter. But really starting to think about how these other types of risks we've been discussing this morning, things like a tail risk cyber event that could happen to a second, third tier of our supply chain. Like, what could that really do to our business, and how do we prepare? So I think it's about building that discipline, kind of making that a part of how you operate, and also really carving out the time for leaders to focus on these types of things as part of their job, not kind of waiting until they happen. Now, there's always something that could happen that we're not prepared for, but just by flexing that muscle, and I think building that capability within the company, on our own, then we're already better prepared to navigate than if we wouldn't have taken some of those steps.
It's really interesting. Maybe two things. I think the key here, and we do this as an industry because we're a risk management industry, right, is we do very well scenario planning. And in the context of geopolitical tensions, we do that all day long. We know of tensions around the globe, and therefore we do scenario planning around the globe to determine how much risk we want to take, what kind of risk we want to take in certain areas. And in some areas we might be willing to take risk consciously. In other areas we may not be able to take risk consciously. But as I segue to, it's interesting because you said some things we're not prepared for, but we still withstood it. Is look at COVID. I mean, we knew there was a risk of a pandemic out there. We've seen it before, right? And the industry knew how to model that. But what the industry or the world was not prepared for was this double, black swan event of a global pandemic and the entire world shutting down. I mean, that was something that I don't think anybody scenario planned for, but I'm very proud of the fact that we got through this as an industry. We were resilient enough to get through this as an industry, and actually it's changed somehow the way we've done business and the way we think about scenario planning.
Yeah, I imagine there's a lot of these issues that were not on everybody's bingo cards 4 years ago, and that I imagine those bingo cards have gotten a lot more diverse and a lot more nuance anyway. And so I've had some conversations, and it's interesting to hear your perspectives, because I'm honestly proud of the industry. We are a risk management industry, And so I get a question, okay, like, well, why are you guys so focused on climate? Why are you doing this? Why are you doing that? I mean, it's your financial services. That's what this industry does for a day-to-day basis. So I think there is some opportunity to send those risk signals that you mentioned, that whether you're looking at it for your own company or for your book of business or for just the society and industry as a whole, the insurance industry is likely going to target those risks and see those risks ahead of your clients, ahead of even regulators or leaders. And so they're painful conversations to have at times, because it's like a black swan event. Nobody wants to talk about that. Oh, that'll never happen, and then it does. Or interest rates go to zero. That'll never happen, but then it does. And so, just again, really proud to be a part of the industry. This is a little bit of an aside that does this and works forward and looks forward, and it can encourage you all to keep doing what you're doing. I'm going to take a couple questions here. We're getting short on time, but there's one that I absolutely want to take, and it does touch on the skills gap a little bit. We've got a panel of very, very successful women here. It's an honor to be a moderator of this panel. And so one of the questions we've got from the audience is, what advice do you have for women in the industry, and that you think was a key to your own career success? So I go to each of you individually in any order you want, but I didn't want to miss this opportunity with this very distinguished panel to ask this question that our audience has been.
I'm probably the oldest on the panel, so I'll go first. And I have to say, this is the first time in my 25-plus year career that I have been on a panel with 3, women leaders of this, of this seniority. So, all that to say, there is hope. And I've probably been a champion of diversity and inclusion ever since I started in this industry. And part of me is still a little bit of a pessimist, because, I've been talking about pipeline of talent for 25 years, right? There's the pipeline. You're going to see this pipeline. The pipeline got clogged several times along the way. But guess what got through? I'm incredibly proud to be on stage with Jasmine and Neeti. So I think if anything that I took away from my career was, taking the risk. Very often, when you see there are opportunities out there, and very often you have to ask yourself, am I going to put up my hand, right? I may not fulfill every single part of that criteria for this job description, but hey, I know I'm going to work hard. I know I'm curious. And I know I've got a skill set that's valuable. And sometimes, and that's what it took for me, sometimes just putting up my hand, for a job or a project that was probably, above where I was capable, but then rising to that challenge. And I say that to anybody in this industry, male, female, whatever background you have, be willing to take that risk and then put in the sweat equity that's necessary to get noticed.
Yeah, I think this focus on learning and taking risks is actually exactly where I was going to go when I never, was sitting in high school like, hey, I want to become a insurance executive. I don't know that I think a lot of us get into this industry because we love the purpose of what we do, and we love, the important role that we play in society. But sometimes, careers take these interesting twists and turns that we don't predict. So for me, it was really about staying open and trying to get as many experiences across the business as I could get, because what I really learned was the more I understood all the aspects of how the business works, the more valuable I became at problem solving, and frankly, the more intellectually interesting the projects and assignments were for me, right? So I would say I think it's very similar to your observation, but just really trying to see as much of that value chain as you can and staying curious. I think the other thing, which is a little bit of a maybe sounds very basic, but really just cultivating a broad and diverse network of people, and also finding younger leaders that you can use to kind of also help mentor you, right? So the further you get in your career, sometimes the less attuned you might be day to day to certain things that are happening on the ground, or you might miss ideas. But part of our job is really working together with others in the industry and understanding the world around us as best we can, and that helps us play our role better. So I treat that like an important part of my job, and it's also really enjoyable.
Yeah, maybe, but it is pretty cool. And what I would add maybe is one, I always say the men have such an important role to play in this, and I first of all, I didn't think I'd ever be sitting up here, but more importantly, I can look back and I'd say it's my grandfather, it's my father, it's right. There's a whole bunch of men who play a role in making you not see yourself just as a girl or a woman, but it's sort of you can do whatever you set your mind to. So it's no different. So that's the first part. And then maybe the second thing I would say, and I thought Commissioner May sort of he said appreciate differences as a source of strength. And I think over time, I was in denial about, and I don't know how many women in this room and how many people of color in this room, initially you grow up actually wanting to not be different and not be seen as different in a room. You actually want to try and assimilate and integrate and not seem different, and so I was probably in denial of that and tried to sort of hide that light under the bushel, so to speak, early on. And then what you discover over time is actually that is what gives you a uniqueness of perspective. That is what makes you different. You connect dots in a different way than someone else would because of the way you grew up, because of your experiences. And so I have learned that, and it's what I say to a lot of women and to a lot of people of color, which is that your difference is your superpower. Instead of calling it different, call it unique. And embrace it and use that as a calling card. And I think there's a lot to be said for that. And I'd say the industry is a lot more open. And frankly, God knows, it's one of the things I think a number of you may know. I didn't grow up in the insurance industry. I put up my hand and I said, man, if there was an industry I would choose to be in today, it would be this one because of all the things we've just talked about. And I think there's an element here of when we think about the complexity of the issues we deal with and have to deal with and the signal that we play in this and the role that we play in the economy, and we think about the quality and the level and the availability of talent that we need to attract to meet those challenges, I would say that's the widest gap I've seen of any industry today. And we've got to fix that. And a big part of that becomes actually embracing this diversity of perspective, and so maybe that's what I would say. It's a superpower.
Yeah, well, as a father of an 8-year-old Taylor Swift fan,
I do love that.
I want to thank you for rising to the challenge, and I will certainly be taking some of those home for her and having that discussion. But it is critically important, and like you mentioned, it kind of goes back to what we've been talking about. It's going to take a global, sustained effort to solve these problems. There is no one group that can solve it on their own, and so I'm honored to be the moderator of this panel. So thank you for that. We've got about 3 minutes left, so we're going to do one lightning round and some closing comments. But one of the questions that was on the panel or on the board was, what is the one risk that you're concerned with that is probably not getting enough attention? So I'll maybe start with you, and we can kind of go down, and then if you got any other closing comments, feel free to add those as well.
I think the one that comes to my mouth, and Neeti alluded to it at the outset, is what we have now come to call social inflation. And it is, inflation, economic inflation, we know what to do with that. We know how to assess that. We know how to price for that. But social inflation is an incredible wild card, and it's a growing wild card, and it is being funded, in an enormous way, and giving rise to new terminology like, nuclear verdict, thermonuclear verdict, and things that the industry just has a really hard time grappling with. And the issue here is that this is a state by state by state issue. So when I say that, what I mean is in order to address that, it's going to require tort reform on a state by state by state level. And here's a place where we would welcome collaboration because it is simply unsustainable. If you look at statistics, I was looking something this morning actually that I had gotten from a gentleman that I had speak to my organization on this topic. Since 2010, verdicts have increased, these kinds of verdicts have increased 275%, right? And what this means is that a lot of this money, by the way, it's not going in the hands of the victims. It's taking a lot longer to get to the hands of the victims. And a lot of it's going to attorneys. And then at the end of the day, everybody in this room and everybody around the United States is paying for that verdict. So it's simply an unsustainable proposition where I think we need to get a stronger handle around that.
At Liberty Mutual, we've banned the term social inflation, and you get to put $1 in the jar every time you say social inflation, because it makes it sound so like, oh, it's social, and it's all polite, and it's all it's legal system abuse, it's litigation abuse, and that is what it is. And we have to start to call it what it is, because that's what gets at the attention. So I wouldn't build on, but that's the one I was going to say, as like, if we can make one commitment in pact, can we not call it social inflation? But legal system abuse is absolutely the one I was going to mention. And maybe the second thing I would say is it's this interconnectedness of the risks. I think we are not drawing that connection as much. Like I said, I grew up, on the investment side of the world, and I always said, listen, if the Federal Reserve sat around saying, hey, interest rates, if we raise interest rates, it'll kill the economy. The whole purpose of having interest rates as a risk-free rate in the economy is about price discovery. It is a risk signal that leads to price discovery and the right risk behavior. And somehow we have somehow made it that insurance rates and pricing does not act as that risk signal. And actually that to create that risk awareness and to create the right behaviors, I think that's the second risk that we have to address together.
Slightly different angle maybe, but I would say access. And I think we've touched on it a little bit in some different forums, but I think all of us in this industry have a responsibility and an opportunity to make sure that we're keeping the types of products that we offer accessible to as many people as possible, because the types of risks that people are facing, as we've discussed the last hour, are growing and more complex. And I just also would say in closing, thank you to all the regulators who are part of this discussion, because I think we share that common goal, and I think many of the things that you're tackling on behalf of consumers and the industry are designed to help make sure that the system is sustainable and we can protect the consumers who need it the most.
Well, that's our time. Pina, Neeti, Jasmine, thank you so much for your insights. This was a wonderful panel. And please join me in giving a round of applause.